to keep the system running, they need to print more money. And that means that overall stock markets will go higher. You might not see them outperforming other assets like gold or Bitcoin. And of course, within the stock market, you will have certain stocks performing much better than others. But generally speaking, if we are on the road to a cracker boom and hyperinflation over the next few years, stock market should go up.
Florian Grummes, a renowned economist, discussed the potential for a crack-up boom in the current economic climate. According to him, a crack-up boom involves a recession in the real economy and a collapse in the monetary system due to continuous credit expansion and resulting unsustainable rapid price increases. He emphasized that excessive expansion of the monetary base and out-of-control inflation expectations are key features of a crack-up boom, which ultimately leads to hyperinflation and the abandonment of the currency. Grummes pointed out that inflation expectations have already started to change as people are considering buying things now rather than waiting for prices to increase further. He also discussed the response to the recent banking crisis, which was to print more money and flood the system with liquidity. Grummes predicted that there might be one more interest rate hike, but ultimately interest rates will be lowered again because of problems in the markets. Grummes provided historical examples of crack-up booms such as the German hyperinflation in 1923 and the bank run in America, which led to printing more money to save the financial system. He argued that the amount of money necessary to be printed is getting bigger and bigger, and the response to any stress in the system is to print more money. When asked about what a crack-up boom scenario would mean for asset prices, Grummes suggested that overall stock markets would go higher because the system needs to keep running, but they might not outperform other assets like gold or Bitcoin. Grummes also talked about dollarization and ECB monetary policies.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The cracker boom basically is an economic crisis that involves a recession in the real economy and at the same time a collapse in the monetary system due to the continual credit expansion and the resulting unsustainable rapid price increases. So the cracker boom is characterized by two main or key features, which is excessive expansion of the monetary base or monetary policies, and that step by step leads to out of control inflation expectations. So there's a psychological component already. And the second key feature is that at the end, a resulting bout of hyperinflation, basically, which will end in the complete abandonment of the currency because the market participants have no trust anymore. And at the same time, of course, you have a recession in the real economy. And it basically means the cracker boom is the crash of the credit and the monetary system due to the continual credit expansion and the price increases that are not sustainable in the long term, and that people losing faith into the money system. The end of a fiat money or a paper money system is always the same, and it's always hyperinflation. And we've seen it exactly that happening over the last 3-4 weeks again. Big pressure in the markets, banks going bankrupt. We had a bank run in America, and the response immediately is to print money. And that's how it is going to continue. And the amount of money that is necessary to be printed is getting bigger and bigger and bigger. And we're talking such big amounts of numbers nowadays. If you compare this with like 15 years ago during the financial crisis, it's going to be bigger and bigger. And I think it's unfolding in stages. Yes, we don't have hyperinflation right now, but I assume to save themselves, to save the system, to save the financial system, they continue to print more and more money whenever there's stress appearing. And there is so many reasons now that they won't be able to continue the hiking. I mean, look, they tried to tighten the balance sheet for 12 or 15 months, and within 2 weeks, 2/3 of it, they had to print again, basically. It's not working, and people have to realize this. But of course, if you or I would be working at the Fed making these decisions, we would probably have to do the same decisions like they're doing, because otherwise we would be risking a complete anarchy and breakdown of the system immediately. Everybody was super bearish in October last year. The hedges, especially by the retail traders, have been unseen and unheard of. And what happened was a big short covering rally, which then transformed into a bull market, basically, in stocks. And now the latest numbers again show that the retail investors and traders have once again ramped up their hedges and their shorts to protect their stock market positions, which again tells me that markets will not crash. They will not go down. Instead, much more likely they will go sideways or higher from here, probably even higher from here, because yeah, if everybody's short, the opposite will happen. And I think smart money, you have to be careful. There's also lots of indicators that could be misleading, but generally speaking, I think that smart money is rather buying than selling, while the dump money, so to speak, is rather hedging and buying shorts. And of course, if you're short and the market is not going down, you have to cover, and that means you will be the next buyer driving the market higher. And so I'm not like a super stock market bull here, but I'm not in the camp expecting a crash in the stock market. I think overall stock market probably sideways to higher. And yes, you will have the typical volatility and very likely a few weeks or months. Typically, seasonality wise, it's going to be August, September, a little bit more challenging time for the stock markets. But overall, I think given that the market, that the Fed basically has already turned around, even though they're not saying it, but you have to look at their actions.
Grummes discussed the current global trading landscape and the position of the US dollar as the dominant currency. He also addressed the possibility of other currencies surpassing the dollar in the future. While he did not foresee any single currency replacing the US dollar, he predicted a decline in its dominance. This, in turn, would benefit assets such as gold, Bitcoin, stock markets, and commodity prices.
I'm a little bit skeptic that gold can immediately start run higher to new all-time highs from here, because I see too much optimism wherever I go. Wherever I look, whatever I read, everybody's bullish, everybody's expecting new all-time highs right now. I wouldn't be surprised if it takes a little bit longer and maybe we have one more pullback, let's say 1900, 1920 over the next few weeks or months. Usually the seasonal cycle for gold is not very supportive in spring. Usually you get an important low somewhere in June, most of the time July or early August. And from there, you see a strong rally. And that would be the rally that could take gold towards $2,500 until the end of the year. So I'm a gold bull. I think very short term, I'm a little bit cautious. I think people are too bullish. But in the medium term, I think that gold will go to new all-time highs. And I think 2,500 by the end of the year is possible. We talked about the de-dollarization. And I think that's the big trend right now, harming the US dollar. It's more and more obvious that China is taking over the leadership on that planet, and that the West in general is not strong enough anymore to counter that. So you've seen Saudi Arabia basically moving to an alliance with China and Russia, and they start trading oil in renminbi, and the Saudis can then exchange their renminbi at the Shanghai Gold Exchange against gold. And that, of course, is not only driving the gold price high because there is a physical gold trade happening now, but it's also driving the US dollar lower because the days of the US petrodollar are basically done. I mean, this is the last 50 years, the Americans have been able to force their US dollar on the rest of the world because any oil trade had to be manufactured in US dollars. And that's done. I mean, the Indians, the Chinese, they now trading and buying their oil in renminbis or in rupees, maybe even in rubles. So things are changing, and it's a drastic change, and it's actually unfolding very rapidly now. And unfortunately, the people in the West, the politicians in the West, and also the central banks in the West still believe that we are in the same setup like the last 50 years. And the wake-up call is already happening as we speak. I don't think that the yuan is going to take over in the next few days, weeks, months, or years, for sure not. But just for the US dollar coming down from that dominance will make a big change. And I think the current exchange rate is kind of reflecting it already. And I think the dollar is going lower from here. We had a massive multi-year top last year in November. And again, there are so many macro factors at work now that I think that the dollar is going lower, which obviously will be very helpful and bullish for gold. It will also help Bitcoin. It will help the stock markets. It will help commodity prices. But of course, if you do your trade, if you do your investments, if you do your business in US dollar nominated currency, then at some point you will questioning if this is the right currency for you to continue to work with, right? If you see that it's constantly losing value, similar to what Europeans experienced last year. I mean, if you were running a business in Europe in euros, having your cost base in dollars, and the euro got weaker and weaker, and in the end, if you did the calculation against the beginning of the year, your euros were down 10% or even more. You could run a good business, but still lose money because of the currency, the weaker euro back then. And I think something similar is now happening to the dollar.
During a recent Russian-Indian Strategic Partnership for Development and Growth Business Forum in New Delhi, Alexander Babikov, the deputy chairman of the Russian State Duma, announced that BRICS nations, Brazil, Russia, India, China, and South Africa, were working towards creating a new currency. The BRICS members have been taking steps away from the US-dominated international trade and financial system, and the transition to settlements in national currencies is the first step towards this. The next step, according to Babikov, is to introduce a fundamentally new currency, whether it be digital or another form. Babikov said that readiness to realize this project would be indicated at the upcoming BRICS summit in Durban, South Africa. However, billionaire venture capitalist Chamath Palihapitiya believes that the recent trend of large economies moving away from the US dollar to settle trades is just noise and does not negatively impact the dollar's dominance in global trade and finance. The possibility of dollarization is a topic of speculation among investors, with some believing it is inevitable, while others like Chamath think it is unlikely to happen. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.